Today, we're diving into how US tariffs, Bank of Canada rate cuts, and a shifting political landscape are impacting the Toronto and the GTA real estate market. Hi, everyone. My name is Rodrigo with the Journii Real Estate Group, and I'm here to guide you to navigate the Toronto market with clarity and confidence. If you're a buyer, seller, or an investor, or just trying to make a sense of all the headlines, watch this whole video because it will give you grounded insights and practical strategies. In April 2025, US President Trump introduced a 10% baseline tariff on all foreign imports. While Canadian goods that comply with previous trade agreements that we had in place are technically exempt, uncertainty surrounding supply chains has still rattled the markets. Industries that have been affected by this, to name a few, are construction, manufacturing, energy, and agriculture. Even with exceptions, fear of secondary tariffs and compliance issues is already slowing down cross border trade. Canada did respond with a 25% tariffs on a 30 billion industry on US goods, automotive parts, agricultural products, household goods. Now, while this trade war is going on with our neighbor to the south, on a positive fact, trade with other countries around the world are up by 23%, which is good news for us. You may ask yourself, why does this matter in housing? Now, developers are pausing projects, material costs are rising, specifically for new construction. Inflationary pressure is re-emerging even as rates fall. For example, a mid-rise condo project in Scarborough just postponed its 2026 launch due to an increased steel and equipment costs. This will affect supply long term, and as a buyer and seller, you should be aware of this. Since June 2024, the Bank of Canada has cut interest rates 7 times, moving from 5% down to 2.75%. Why is this? To stimulate growth amid trade disruptions, a slowing GDP in our country, declining consumer spending, but here's the twist. Stats are showing us that even with cheaper borrowing, consumer confidence has not returned. People are cautious, specifically in real estate, where job security and future stability matter more. Inflation is hovering around 2.3%, meaning that the bank is unlikely to cut the rates again soon. However, many economists are projecting interest rates to drop another 50 basis points by the end of this year. Many economic factors will be taken into account when they make their next announcement on June 4th. In April 2025, home sales decreased by 23.3% year over year with 5,600 transactions. The average selling price fell by 4.1% to approximately $1.1 million, and new listings increased, totaling about 19,000 properties. This data suggests that market with growing inventory and more options for buyers. But what does that mean to you? It's not a crash, it's really a standoff. Sellers are testing the waters, buyers are waiting for the deals. It's really a confidence gap, not a value collapse. More and more, we're confirming how resilient and strong our market is. In the past, we would have seen price adjustments significantly and pretty quickly based on the current stats in the market. However, we're not seeing this, which is keeping our real estate prices strong on a long term basis. A great investment. Builders, on the other hand, are slowing down launches. Tariffs on materials and economic uncertainty definitely equals risk. Fewer no builds today will mean less supply in the future, which could tighten up the market down the line. Which, let's think about in the positive news for the condo market, this will actually means that supply will start to decrease little by little, but it also means higher prices for low-rise homes and more bidding wars in the future. So plan for that. If you're buying in this market, here's what you need to know. You should definitely look into buying if A, you have secured income and financing. B, you're upgrading and want to capitalize on lower competition. C, you're a first-time home buyer who could not compete in 2021 bidding wars, and you currently have a lot more options out there. Here's the reality. Prices are down, options are up, rates are projected to fall. However, each micro market behaves differently. While inventory may be abundant in some areas, others remain supply constrained and may still experience bidding wars. More listings plus nervous sellers typical equals more negotiation power. Historically, buyers who stepped into during the soft markets, I'm reminded of 2009, 2017, they did see big gains within 2 to 3 years, but be realistic and smart and take into account risk when making your decisions. Get pre-approved, and within this pre-approval process, remember what matters the most is that you should be comfortable with your monthly payment versus what the bank tells you as your max borrowing power. Map out 12 to 24-month financial outlook to include housing costs and costs for day-to-day living. The last thing you I guess, be is a homeowner, but home poor. If you're thinking of selling and selling today, it definitely takes strategy, not hope. Rule number one, pricing and strategy is everything. Overpricing equals fewer showings, more time on the market, and eventually price drops. You must lead with value, not memory of 2021 prices. Rule number two, marketing matters more than ever. Good listings don't just show up, they stand out. Professional staging, clean visuals, lifestyle driven descriptions, video walkthroughs, and social outreach will make a huge difference. Rule number three, expect your property to be more time on the market. Buyers are cautious, but it's not personal. It's just simple economics. Be flexible. Lean into what makes your home compelling. Remember, first impressions still count. Here are three pro tips. If you're moving within the GTA, this might actually be a great time to upgrade. The gap between the mid range and high end prices has narrowed, saving you money in the short term and long run. B, if the property you're looking to sell is within a high demand pocket and you see that there's limited supply, this might be the time to sell as long as your next move also makes sense with the current market conditions. C, if you're buying and selling in the same market, timing balances things out, I find. In some cases, we're seeing where sellers are, yeah, they're losing some money when they're selling their property, but also gaining more money when purchasing their next home. And at that point, financially, it does make sense to make a move since overall, you're making money versus losing it. The current Bank of Canada, it's holding the interest rate at 2.75%. However, economists at major banks do predict that we'll hit 2.25% by year end. Why is that? GDP growth is slowing. Q1 was just 1.5%. Inflation is near the Bank of Canada's 2% target rate, and consumer spending is cooling. That opens the door for more rate cuts. Lower rates equals better mortgage affordability and more incentive to buy. The Bank of Canada is watching two things: inflation trends and whether recession risk escalate due to trade uncertainty. It seems like we still have a bumpy ride ahead. However, I think as a country, we will end up in a better place, in all honesty. Canada has a new prime minister and policy directions are still forming. A few questions that come top of mind are we going to diversify away from the US trade reliance that we currently have? Is there going to be home buyer incentives? Are we going to introduce more housing supply initiatives? How many campaign promises will actually be delivered during his term? If anyone has a crystal ball or answer to these questions, I'd love to hear from you. All of these are unknowns, and planning becomes essential as a consumer. You should be aware of all these moving parts when making your decisions. It does seem like the meeting between Prime Minister Carney and President Trump this week was actually cordial on both sides and signal future negotiations. With the tone softening on both sides, this could help and stabilize business confidence in the months ahead. Here are three practical tips to navigate the rest of 2025. Tip number one, get advice tailored to you. Don't follow generic advice. Know your numbers and have a personalized strategy, which gives you clarity on what you need to do. Tip number two, think long term. If you're a buyer or seller, are you able to benefit from the current market? Positioning yourself for the future is important, and knowing all the facts that surround those decisions is very crucial if you're thinking of making a move. At this point, it's really important to surround yourself with professionals that would help you and guide you every step of the way so that you can make the right decisions. Tip number three, don't try to time the market. Perfect timing is a myth. Preparedness beats prediction every time. Act intentionally. Reality is that uncertainty breeds opportunity when you have the right strategy behind your decisions. I get it. Toronto's market is complex, but complexity brings opportunity. At Journey, we're here to help you navigate with insight, strategy, and heart. If you're thinking of buying, selling, or just want to talk options, reach out for a free consultation. No guesswork, just guidance. With all these shifting factors like tariffs, rate cuts, and political uncertainty, how will the Toronto real estate market evolve for the rest of this year? Will it actually stabilize, or are we in for more surprises? Who knows? But I would love to hear your thoughts. Drop them down below. Let's start a discussion. And don't forget to like, subscribe, and hit the bell so you can stay informed and empowered through every market shift. Check out one of our videos, and until next time, take care.